Hi, for those who are watching, can you guys hear me? If you can hear me, just type in the comment box yes so that I know whether I can continue. Right, thank you. Okay, I think I will just start now. Right, today I don't have a guest with me, and because for the past many weeks we have been doing an interview series with my guest, and today I just wanted to do something different, and let's talk about investing proper. Right, I want to share with you this investment strategy known as a magic formula investing. Okay, I also will show you how to screen using this strategy and what are some of the stocks that get surfaced. Okay, because I also didn't really know what is going to come out of it, so I'm equally as excited as you. All right, and okay, thank you, Eddie, for letting me know that you can hear me. Okay, so let's carry on. I'm the CEO of Dr. Wealth. I'm Alvin, right? Probably some of you have like read some of my articles or even the books that I've written, Secrets of Singapore Training Gurus, as well as Singapore Permanent Portfolio. Today, I'm going to talk about a strategy that is not covered in these two books. So it is something that even you read from what I've written, you will still learn a lot of new things today. Okay, so I'm also a trainer, right, for the Intelligent Investors Immersive Program, as well as the Growth Dragons Investing course. And some of you may even attend some of the events that I've been to, all right, like the recent one at REIT Symposium. I don't know whether you guys attended, right? So I was one of the panelists that talked about the REITs. It was a long panel, it was an hour, right? But good questions from the floor, okay? So let me begin with this strategy, right? The name, as cheesy as it sounds, the magic formula, right? It sounds so scammy, right? Why do people believe in such things in this world? Okay, but the name aside, it's actually quite a very serious strategy, right? It's a very proper investing strategy, and it's written. It was first captured or introduced to the world in this book called The Little Book That Beats the Market. Okay. And then they had the second edition years later, and the tongue-in-cheek title, The Little Book That Still Beats the Market. All right. So these were the books that captured this magic formula. Okay. I don't know how many of you have read it. Am I the only weirdo that have read this book? If you have, can you type I read this just type I read in the comment box, right? So that I know there are some other people who are have gone through or have witnessed this strategy, all right, from these books. Okay, just let me know whether you have read this or at least whether you have heard of this magic formula. All right, just type I have, okay, in the comment box, please. And the author of this book is Joel Greenblatt. He may not be the most famous fund managers in the world, right? You've probably heard of like Warren Buffett, Howard Marks, Ray Dalio. Those are the famous one, right? But Joel Greenblatt, if you have been following the investing circle for quite a while, you should also hear his name quite often, once in a while, right? Only those who really rarely read books or get involved in investing community, then you probably wouldn't know who he is. Okay, he is the founder of this Gotham Capital, right? It was first, I think, a partnership, many probably 20, 30 years ago. And he was doing very well for the fund. He was doing like 50% per year. Okay. And he specialized in special situation. Okay, which means like M&A, things like spin-offs, right? A lot of all these corporate action. So he was very good at this kind of special situations, analyzing them and taking a position on something that eventually pay off very well for him, right? And then thereafter, he became more like a conventional fund manager. He set up a unit trust or fund, mutual fund. That's what they call it in the US, right? And the EUM now is about 5.6 billion, right? So it's quite decent size, considering um, uh, this fund management business, right? And at the same time, he's also a adjunct professor at Columbia School of Business. Okay, so that what makes him a lot more suitable to write books and to share ideas, because as a professor, it's not good enough if you just know what the theory is. You also need to communicate and teach people and help people understand what all these theories are all about, right? Okay, thank you, Lee Wen. You have read the book. Okay, so I'm not the weirdo, all right? Okay, so thank you very much. And the let me then explain what this magic formula is and how it came about, right? It was inspired by two people. Okay, like many value investors, people will always refer to Benjamin Graham, because he was like the father of value investing, right? He was the guy who really developed this style of investing, when a lot of times in the past, people were just speculating in the market. Nobody has actually seen the market through a pair of lens using value, right? So he was the first guy, and he emphasized basically buy with margin of safety, or buy cheap stocks, lah. Okay, that's what he has advocated, right? Why buy expensive when you can buy cheap? And of course, investing also get evolution over time, right? So they get reshaped because environment changes, the market changes, and strategies probably will need to be updated as well. And when it came to Warren Buffett period, okay, so then he tweaked a little bit of that value investing strategy, and he started to look at, okay, it's not just buying cheap, but you also want to buy wonderful businesses that can grow over a long time and can continue to generate a lot of money for shareholders. All right. So, which means the essence of magic formula is whereby Joel Greenblatt combined the both ideas together. You want to buy wonderful businesses at cheap prices. Okay. So it's very elegant, it's very simple to understand when it comes to this definition, right? Who don't want to buy wonderful businesses at cheap prices? Everybody wants to do it, right? But the question is how? How do you do it, right? What should you look out for? Is it just buying low PE stock and buy good businesses that you use qualitative analysis to analyze, right? So in the book, he did mention specifically how to go about it. Okay, so the rule number one, he actually only have two rules, right? Because that's the two principles that he wanted to combine from both Benjamin Graham and Warren Buffett. So rule number one is about wonderful businesses. Okay, so buy companies with high return on capital. Okay, and he even defined for you, what do you mean by high return on capital? It's based on this formula, right? It's a ratio. Okay, it's pre-tax operating earnings. Okay, or you can just put it operating earnings divide by working capital plus net fixed assets. Okay, so it's like a mouthful, right? So maybe let me explain a little bit simpler, right? Without going down into really the math and the financial statements. Where do you get these numbers? Okay, because most important, you get the essence out of it. So basically, return on capital means that every business will need capital, right? Okay, capital doesn't mean just money. Okay, capital can be like equipment, can be like your inventories, all these, right? So all these are considered capital. Okay, and you need capital to generate return. Okay, so a good business is defined as a company that uses the capital very efficiently and generate a high return, right? So a high ROC, or high return on capital, essentially means the return is high compared to the capital that's employed. So which means the business is very efficient. The management runs this business very well, and they can extract a lot of value out of the capital they were given. All right. So that is a definition of quality business. Okay, that's a definition of quality business. And then let's talk about rule number two, right? Is to buy stock cheap. What is cheap? How cheap is cheap, right? So people also struggle with these kind of questions, and of course, you also have a solution. Okay, most people will refer to using the most common metric, right, which is the P ratio. You want P ratio to be low, blah 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 blah. But Joel Greenblatt feel that it is not intuitive to use P ratio, because P10, P15, P20, if you don't have a gauge or you don't have a ruler, right, to measure what is high, what is low, it's very hard for you to tell. Okay, so what Greenblatt did was that he inversed the P ratio and called it the earnings yield. Okay, earnings yield. Just like, we always think in terms of dividend yield, right? Okay, so that's easy. Oh, 5% is high, is it good, etc. Right? It's a lot easier to comprehend, right? If I invest $100, I get 5%, $5 as dividends, right? It's a lot easier to know how much you're getting back. Okay, nobody say, oh, what PD ratio, right? Price to dividend ratio. Okay, so it's very unnatural. Don't know why the world ended up with a PE ratio kind of definition. So this the dividend yield is like a inverse of the PD ratio. So your earnings yield is like the inverse of your PE ratio. And he didn't. Another thing to note, right, is that his definition for earnings yield is also different from just inversing the PE ratio, because the numerator that he used was again the operating earnings. Okay, so operating earnings is somewhere in the middle of the financial statement. It's not the net earnings, right? So he didn't use net earnings, and instead of using market cap or price, he used enterprise value, right? Which is, I would say, more conservative because you include the debt in it. Okay, so for high gearing company, right, where they take on a lot of debt, then their enterprise value will be higher. Okay, then their earnings yield will drop. Okay, so that is how he defined as earnings yield, right? It's not just simply an inverse of P ratio. It includes the debt as well, right? So basically, a cheap stock is where the earnings yield is high. Right. So in other words, you want both to be high. You want the ROC to be high, then you want the earnings yield to be high. Okay, and the question is, how high is high? Then consider good, right? So another thing about magic formula is not a absolute valuation, right? It's not an absolute valuation, but it's a relative valuation. What do I mean by that? Absolute valuation, usually it means that you calculate the value of one stock, you know whether this is undervalued or overvalued, whether you can invest or not. But when it comes to relative valuation, calculating one stock is not enough. You need to compare to the rest of the stock to see where this stock lie and where this stock rank. All right, so it's essentially a ranking system based on these two rules that Joel Greenblatt has devised. All right, so if you guys have any questions, you can just type in the comment box. I can address them later. Okay, and this is how the ranking is done. All right, so remember there are two rules. First rule is return on capital. Second rule is earnings yield. Okay, so you want both to rank high, then it is a good stock. And you just want both to be a good number, a good ranking. Okay, so how do we do that? Because some stocks may have a good ranking for rule 1 but have a poor ranking for rule 2, and if you combine their rank together, they will be lower down, right? And there are some stocks that are different in the sense that they rank higher on rule 2, they are cheap, but their business are not so good, right? So they also rank lower. So you want both good businesses and cheap prices at this point in time. Okay, so for example, if this stock G in rule number 1 it ranked number 5, rule number 2 it ranks 7. Combined ranking, so you add together 5 plus 7 gives you 12, right? So stock B maybe is the highest ROC stock you can find in the entire stock exchange, right? So it ranked number 1, but it's not that cheap. It ranked 13. Okay, so you add together, then become 14. So instead of first place, become a second place, right? But still quite good, right? So on and so forth. You just combine the ranking, and then you have a new combined rank, and you rank them from the lowest to the highest, right? And then he said that you just simply form the top 30 stocks as your portfolio. Just buy the top 30 stocks, and then a year later, okay, 1 year later, you do the ranking again, right? Any stocks that is outside of the 30, you sell. Okay, any stock that is inside the new 30, you buy. So at any one point in time, you just keep that 30 stocks, and you only do your buy and sell once a year. Okay, so it's a very systematic way of investing. You just rely on very sound principles, right? High return on capital stock, as cheap as possible at this point in time. Okay, so this is a very classic way, very sound principles, all right, and he put it in a very simple form for retail investors to follow, all right. So that is the strategy. Then of course people will ask, what is the return? Why should I use this strategy versus other strategies out there? So in the book, he also have tabulated the results. All right. The book was written in the early 2000s. All right. So when he first published it, it was 1988 to 2004, and the return in that period was 30.8%. This is per annum. All these are per annum, right? So you actually beat the index itself, right? So once it does better than the index, then you can say that it's a very good strategy. Okay. And in the second book, he also updated his returns, right? Because it was published years later. Okay, that includes the 2008 financial crisis, right? And the returns still decent, right? And it beat the index again. Okay, but something to note, you start to see that the returns has start to decline, right? Used to like 30%, then after that is close to 20%. Still very good lah, but the returns have been dropping. Okay, so one of the possible reason is that excuse me, I think the value strategy hasn't been doing that well, because if you realize the strategy has a value embedded in it, so the moment you buy cheap, right, the value factor will come in. Right, so this part is the value factor. This part is not the value factor. So it has half that exposure to value, and I think that in the last 10 years the value is not doing that well. But because of this ROC, right, you each should compensate. Okay, because you are still buying very good businesses at the end of the day. Okay, so I think this strategy is still very robust, right? I don't have results that's after this 2010 because he didn't update it after that. Maybe the third book will have a new set of results that we can look at. Okay, and how then do you find stocks using the magic formula strategy? Okay, how do you find stocks? One way is that you can go to this is a website done by Joel Greenblatt himself. Right, it's free to use. You can just sign a free account if I'm not wrong. I think the URL is magicformulainvesting.com. Okay, right. You can screen for the stocks and then you come out. Okay, so the only issue is that they only allow you to screen for US stock. Okay, they only allow you to screen for US stocks. All right. So I have a better solution for you. Okay, you can use our Dr. Wealth app. It's free to use. I will demo to you how to use it. We have a magic formula screener that is based on the formula that has been written in the book by Joel Greenblatt. Okay, and you can screen for many countries, right? You can screen for Singapore, you can screen for US, you can screen for Hong Kong, you can screen for China, you can even screen for Vietnam if you want, you can screen for Malaysia, all right, Indonesia, Japan. Okay, so we have all this financial data and you can just screen for them and it's free. Okay, so let me now demonstrate to you. All right, let me demonstrate to you so that you get an idea. Okay, I need to change screen. All right. Okay, so let me demo to you. How do you even get to our app, right? You can just use your browser, okay? app.drwealth.com, right? Just app.drwealth.com. You can use your mobile phone or you can use your iPad or you can use your desktop, doesn't matter. Okay, and then we'll direct you to a default search screen. Okay, default search screen. Actually, I don't know whether you guys can see my screen, right? Just make sure. Can, right? Okay. So how do you go to the magic formula, right? You can see the navigation bar is at the bottom, right? You can click on this discover. Okay, so you lead on to the different kind of strategy screen, and today we're talking about this magic formula. You can see over here, right? So you just click magic formula, right? And how do you change? The default is Singapore market. Okay, the default is Singapore market, but you can change other markets if you want to, right? Just click on the filter bar. You can see China, Hong Kong, Indonesia, Japan, South Korea, blah, 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 right? The default is Singapore. So let's just use Singapore since we are probably more familiar, right? with all our home biases. Okay, so we default screen out the top 50 stocks. Okay, we do the combined ranking for you. All right, so you don't need to go and calculate it yourself. Okay, everything is automated. The data is just fed inside. So now maybe let's run through some of this counter. All right, you can see the rank we put here, the combined ranking. Okay, the combined ranking over here, and we also show you the earnings yield and the return on capital, what the numbers are. Right, so and of course these are just names, and you may not know what business they are in, and what you can do is that you can definitely click on them. Okay, click on the stock name, and then you open up the stock page, right, which you can see what their financial metrics are, the additional ones. Okay, and you can also read the company info, what they do, right? So medtech is actually one of the hottest stocks in Singapore, right, because they distribute a lot of the medical consumables for hospitals, which is highly in need during COVID-19, right? You can see the share price crazy. When 10 cent become $1, right? That's 10x in less than a year. Okay, you can even like click like the relevant news. Okay, relevant news that we pull from, let's say, Business Times or The Age, and analysis if there is any. If let's say analysts cover the stock, we will put it here as well, right? So for this stock there isn't. Financials, you can see their annual results, okay, the income statement, their balance sheet for more details. Okay, these are very standard stuff, right? Okay, so this is how you can find out more information. Okay, maybe I switch to the card view, right? Because sometimes if let's say your mobile phone is too small, you can use this card view so that it enlarges for you. All right, so the same thing, you will just rank. So this is the medtech, right? Medtech, we have look at it. Okay, very high ROC, right? Probably because of the crazy earnings, crazy returns. Okay, Best World is the second one. Okay, but I think Best World is suspended at this point in time. So even if you want to buy, also cannot buy. Okay. Right, so maybe you are hearing my kids screaming. Okay, so I apologize for that. Yeah, that's the downside of working from home. We probably get distracted once in a while. This one is Union Gas. Okay, Union Gas. Okay, sounds interesting. So what I can do, right, is that I will just open them up in more tabs. Okay, so that I can look at them later, right, one by one. Okay, Union Gas sounds interesting, right? Jack Speed, I don't know what it is. Okay, so maybe I will skip. EEM, right? This is one of the hottest stock also in the electronics, right? Okay, so it appear in the screen. So sometimes when they appear, this kind of familiar stock, they appear in your screen, you tend to play a bit more preference or favoritism on them, right? And that's natural, okay? Yeah, but let's just, I'll just open up all these stock pages, then we can take a look at them. Okay, prop next, all right, surprising. Okay, this is a real estate agency, right? Fortress Minerals, personally I don't like this kind of mining kind of businesses, all right, so I'll skip. Okay, why I don't like? Because it's very hard to tell how much resources they actually have based on the piece of land that they own. Okay, a lot of times they just estimate using diagnostic kind of system, and sometimes it's very easy to overinflate what they actually have. So because through history, a lot of fraud happens in this kind of mining company, so I will just avoid. Cortina, again, sounds interesting, right? Expensive watches, okay, watch retailer. Those who like watches will probably know Cortina. Top Glove, right? This is also another hot stock during this period. Okay, so it seems like actually this screen surfaced a lot of these stocks beforehand, right? So actually, come to think of it, right, you only know some of these stocks have outperformed very well already, right? So if only you screened this earlier, right, then you probably have some opportunities. Okay, but some of the stocks haven't run, right? So maybe we can take a look later. Ohua, this is I think China related, so I'll avoid as well, right? Because same thing, a lot of the S chips have issues. Okay, a lot of corporate governance issue, so better to avoid. Lion Gold also was one of the speculative stock that got investigated, right? So I'll skip. Jiutian also from China, skip. Hyphens Pharma, okay, interesting news recently, all right. Okay, this one is also interesting. They make because they make a facial wash, skincare product that my wife was using, right? Yeah. So and then it ran up actually and came back down a bit. So it's quite a stock that's interesting. Some power, don't know, not sure, right? Maybe take a look, right? Oops. Okay, let me just go back to the screen. Sorry about it. I was at some power. Yeah. Okay. Let me just go back to the sun power. Right. Meanwhile, if you all have any questions or anything, just comment. Okay, I will look at them later. Where is sun power? All right. Okay, here. Okay, let me just, because I'm not using a mouse, so it's a bit difficult for me. Okay, next one, Teho International. Also don't know what this is. All right, maybe we skip. PEC, this is in oil and gas. Okay, so we know oil and gas now is down, right? The cycle is down. Maybe there are some value of it. All right, just take a look. What is this? Medinex. I'm not sure what this is, but since it's medical, oops. Okay, I think I don't use the cut view. I'll just use this table. I think it's easier. Let me see, where was I? Medinex, right? Okay, so I will just also open this Medinex. Right, add value tag. I think recently run, but I don't know what this is. Okay. China Sunsim from China. Due tag, I think it's also from China. This one is Singapore Medical Group, probably. Excel point, not sure what this is, but we can take a look. Okay. AV tag. Moya, I also think is probably China related. Micromechanics. Franken. Hourglass. All this looks interesting. And Singapore on ONG. Okay, so I think enough lah. I don't want to select everything later. We have too many to look at. Okay, let's look at the first one, Union Gas. Wow, share price already recovered more than since COVID. Okay, they started the year at around 25 cents. Now it's 35 cents, right? If only you screen this earlier. Okay, not expensive. P is still 7. Okay, price to book, okay lah, above. U is at 5%. Okay, just take note, right? All these are based on the latest annual result, right? It's not based on quarter, it's based on annual results. Okay, and you can see there under this part, there's a customize your favorite metrics. So some of the metrics maybe you want to see in this case, I don't know, do we have a ROC, return on capital? We have return on assets, return on equity. Okay, there's a ROIC, right? Maybe you can just add it in. Okay, so once you add it in, you can see it over here. And you click in, you can even see the history, how the ROIC has been over the last few years, right? So this can be quite useful. Okay, depends on what kind of metrics you want. We have 50 over metrics, so feel free to add as many as you want. All right, some people like quality of earnings, for example. Okay, so up to you. All right, and you can take out those that you don't like as well. So you don't need to look at, so you don't need to keep scrolling just to get to where you want to see. Okay, and there's also some write up, right? So they are the market leader in terms of the LPG. You know, some of the homes are still using the, you know, that the canister, right, to cook. Okay, so that's the gas that they are supplying, right? And they are a market leader, if I'm not wrong. Okay, so definitely this looks like a interesting counter, right? And the price has pulled back a bit, so it's not that expensive. It doesn't look expensive, even based on metrics itself. Okay, so I'll start this so that it goes to my watch list, right? So it goes to my watch list over here. Okay, later I'll show you why there's a value for this watch list itself. Okay, so next, move on. AEM, right? Also did very well. Share price gone up about 70%, right, from the start of the year. Okay, PE 12. Okay, not that expensive, but on the yield basis is not high lah. 1% yield is very low, right? That is not high, is reasonable. Okay, so you can just have a quick glance through, right? So this one is also stock that is currently on the right trend, serving a big customers, right, in the electronics manufacturing business. Okay, so I'll just put this in my watch list. All right. Prop next, okay, also did well, right? Also higher already, share price higher than the start of the year. Real estate agency, I think the mid-year results was very good, right? It surprised everybody. That's why the price jumped up. You can see that one day jumped from 54 cents to 59 cents, right? Just one day. Okay, so I think that was the day that the results was released. Doesn't look expensive. P7, dividend yield 5% is not expensive, right? That is a little bit higher. Okay, cross at 100% mark, right? But still quite decent. Okay, so I just put in a watch list. Cortina, right? Oh, also jumped recently. Okay, jump when? Just few days ago, 3 days ago, right? From 167 jump to $2. Okay, 20%. Right, what's happening? Is there any news? Let's take a look. Right, so if we have screened last week, okay, then maybe so no, cannot be. This one is full year result. That was in July. Okay, that was in July. So don't know what's happening, right? But still not expensive. Okay, this one also decent. Okay, retail watch business quite easy to understand, right? Not difficult. Top glove, right? Okay, this one probably because of you see a big huge drop, right? It's because of the bonus issue, if I'm not wrong. Okay, so it's normal, right? Not the cheapest stock you can buy right now, okay, because during COVID-19, it's a hot stock by itself, right? But okay, just put in our watch list, right? You can put in watch list, doesn't mean you can buy. That doesn't mean you need to buy now. Now, Hyphens Pharma. Okay, personally, I think this one quite interesting. All right, it manufactures they have a brand called what's that brand already? Did they state here? Ceradan. Okay, don't know how to pronounce that lah. Right, because my wife use it. Okay, so she used it like way back. I should have bought, right. So now I'm very attentive to what my wife uses. Okay, yeah, try to find out whether there's a listed company behind it, and usually whatever she use, yeah, the stock do quite well. So I must pay more attention to my wife. Okay, so you can also look at the news. I think there was some analysis covered by some analysts from the brokerage. Yeah, Philip actually covered this. So that was the last month, right? So you can read the analyst report as well. Right, so I'll start this. Okay, let's move on. All right, Sun Power Group. As I said, I don't know what company this is. Investment company, blah blah blah. Okay, but it looks like it's from China, right? Headquarter China. So I will skip. Okay, the one. PEC, this is oil and gas. You can see the share price didn't recover. All right, didn't recover. Still near the bottom of March. Lost money last year. Okay, but still gave dividend yield. Still gave dividend. That is reasonable. All right. So if let's say I want to play oil and gas, this might be one candidate. Okay. Medinex. I also don't know what this company is. Support services. Okay. Checkup and things like this, right? Sounds like SATA. Okay, sounds like a competitor to SATA. All right, I'll just start this first. Okay, add value tag. What do? They didn't say much. Oh, sale in telecommunication equipment and products. Okay, maybe 5G, right? They can benefit, needs more analysis. Okay, so when I put the watch list, usually it means that it deserves more deeper look into the company, right? It doesn't mean I put watch list is a sure must buy kind of thing, right? It's just that some stocks you can see I don't even know what it is, right? So I need to drill deeper and find out what they actually do, right? And whether it's worth my investment dollars, right? There are just so many stocks you can invest in, right? Numbers looks good. Okay, quite cheap, right? Even below price book value 1. This is what stock? Singapore Medical Group, right? SMG. Okay, I think also similar. Sounds like all the medical services, right? So you can also see medical stocks are showing up on the screen, right? Getting cheaper and cheaper. I think because they lost a lot of customers, especially overseas one, right? Medical tourism is not allowed even at this point in time, right? People can't travel. Excel Point Technology, what do they do? Electronics trading and trading of electronic distribution, electronic components. Um, very competitive. How's the margin like? Let me see the profit margin. Oh, I didn't have it here. Let me just put in profit margin, because sometimes a lot of this kind of trading business, their profit margin is very thin, right? So it's not worth looking at. Yeah, it's very thin, 0.1, not even 1%. Not interested. Okay, AV Tech. Visited management before, right? So they specialize in chip testing. Okay, so those manufacturer of chips, they will send the chips to this company to do the testing. So they will put the chips under stress, right? Thermal stress, vibration, whatever. Then those chips that don't pass, they will remove them, and then the ones that pass are pass the quality control. Then they send it back to the chip manufacturer. So they do the testing on behalf, right? So I think semiconductor is coming back. Semiconductor is getting more important in this world, right? So IoT, right? Internet of Things. Okay, every device also have chips. So I think this is interesting. Micromechanics in the semiconductor industry as well. So one of the pretty well-run company, I would say. They make special parts for semiconductor manufacturing. It's a precision engineering company. Okay. Franken, right? Seen this name a lot, but not really sure what they do. I think it's also the same thing, right? It's also the electronics manufacturing, okay, mechatronic stuff, right? So interesting. Let's save it. Hourglass, okay. Cortina share price jump, but Hourglass share price didn't jump. Okay, so something is happening to Cortina, right? So this is the competitor to Cortina, okay. So let's put it here. And this is the last one, another medical stock, but this focuses more on women, okay, obstetrics, gynecology, right? If I'm not wrong, they are also the biggest private obstetrics clinic in Singapore, right? So I think this is also a different medical company. Okay, so then I will have my watch list over here, end up with 16 stocks. So if not enough, I can go back to the discover screen and screen the magic formula again. I can even expand to other countries, right? But you can see that I already have a good number of stocks that are in the watch list, okay? And now it's important to tell you something, right? So let's say you screen already and you save your watch list, okay? Remember, okay, you need an account to save this watch list. If you do your work, you screen out already, you didn't have a login account, right? You close this tab and you come back, right? The watch list will be empty. Okay, so if you want to save the watch list, please, you must create an account. And create is free one. Okay, so you don't need to pay for anything. You can just create an account, use whatever you want. Use Facebook login, Google login, or just your email login also can. Okay, just remember to sign in. Otherwise, your watch list will disappear after you exit the screen. Okay, and another use, right, after you populate this watch list, right, then if you go to the feed, okay, we will show you the relevant news and analysis or blogs that has written about the stocks in your watch list, right? Like Tumblr came out, and PropNext came out. So it allows you to follow the stocks that are interested in a lot easier, right? So you don't need to go and look for all this information by yourself. They will just put it for you. All right, so this is what we think will be very useful for you, right? And when you have time, you can just look at the individual stock, and then you go and look in detail. You can even download the annual report, look at some of these things. Also, you can even get more ideas as you follow the news over time, right? You don't buy immediately, but you get to know them, right? It's almost like dating, okay? So the feed will show you some of this analysis or some of the news regarding these stocks that you're interested in, and over time you build out that knowledge. Okay, so essentially this is what you can use this for, right? Let me just go back to the slide. Let me see what kind of questions you have. Okay, oops, now I cannot share my screen. All right, Is my screen hang? Is my screen hung? I can't seem to control my Google Chrome now. Let me check my phone. You guys still can see, because can see my white hair. Okay, because my Chrome, I don't know why is hanging on me, so I can't control and change the screen anymore. All right, so I'll just answer some of the questions. Okay, let me see. Ki Bao Pun asks, will you share how to incorporate this value investing with factor-based investing? Unfortunately, it will take too much time to explain both together, right? I don't know. I probably went through the factor-based investing session, right? So it's very, very different from what this strategy is. Okay, but you can always use different strategy to combine into your own portfolio. All right. Oh, Kang Jose Cortina. Yeah, see, missed it. Okay. You're talking about this like since last year, right? I think. Okay, some start to ask about specific stock. Okay, I'm not going to like because the purpose of this session is more to really to show you the strategy, how it is done, and what do you get from the screen results. Okay, so I think I will stick to that, right? Otherwise, the scope of discussion may go out of the topic that we are aiming today. Okay. Vincent, they asked about oil and gas cycle. Okay, because we have one oil and gas stock that's get spit out right from the screen results. Okay, so definitely oil and gas is in a down cycle. And when it comes to cyclical stocks, right, I believe that it's good to buy when they are cheap. Okay, it's good to buy when they are cheap because when the cycle comes back up, the share price should follow as well, right? The only trick is that for the oil and gas counters, you need to be careful because they tend to be more highly geared. They have a lot of debts and things like this, so they need to pay down this debt. And if they don't earn enough, they may go into bankruptcy and things like this. So as the industry shrinks, some of these companies will go bankrupt. Okay, so of course you do not want to invest in a bankrupt oil and gas company. And what you can do is that that's the reason why you use things like magic formula to help screen out this kind of counters. Okay, they tend to be more resilient. Right, basically the trick is buy cheap ones, but they need to survive the downturn, right, so that they can emerge stronger. Okay, Stonehaven asks, no bank stock. All right, this is something, okay, good question, because Joel Greenblatt has also mentioned in his book before. He said that this is not meant for finance company as well as the utilities, right? He was very specific about these two industry, right? Finance, I think the reason is because their financial statements are very different. Financial, like banks, right, can have like 500-600% debt to equity ratio, but for a normal company, you cannot do that. Okay, you cannot do that. All right. So their numbers are off the charts. So if you do a relative ranking, right, it defeats the purpose. They become the outliers. Okay, so I understand why he doesn't want to put in the financial companies. As for utilities, he didn't explain much. Okay, I also don't know why he excluded at utilities. All right. Okay, let me see. Okay, so you can only see my talking head, right? It's because I have lost control of my Google Chrome. Okay, I cannot share my screen anymore. But anyway, pretty much most of the things are done already. All right, so I will just answer some of your questions. Okay, Josephine asks, can one search for a list of companies with a specific criteria, PE less than 1? Okay, we currently do not, our screeners are all preset screeners, right? If you want to use specific screeners, no, screeners for specific criteria, there are bunch of them out there, right? Like even sgx.com has one. You can use it. They have a PE specific kind of field for you to screen, right? Because we think that since a lot of people have that, we don't need lah, right? We rather do advanced screening like magic formula. If you want to use normal screener to screen for magic formula, it's almost impossible. Right? Okay, you need specialized data and algorithms to do the screening properly, right? So we think there's more value in that. That's why we did it up in this app itself. Okay. Kit Pan asks, any advice how we should allocate our investment between different counters? Okay, so for magic formula is also very standard. You just have equal weightage for every stock. Okay, so let's say you buy 30 stocks, you just have 3.3% of your capital in each stock. Okay, it's as simple as that. All right. Okay. Union Gas and Ohua can be considered as utilities. Utilities, I think when Joel Greenblatt referred to was more of the power station, right? More like your Sembcorp industry, not the entire one, but a portion of it. All right. So Union Gas is not really. It's more like a commodities trader, right? They buy the gas wholesale and then they distribute it to retail, right? So they earn the arbitrage prices. All right. Okay. So actually, I have a few more slides now, but unfortunately, my let me see whether I can salvage it. Just give me a moment. So keep your questions coming if you have more. Let me see whether I can salvage it. Okay. No, unfortunately, I cannot. Okay. So anyway, I will just verbalize it. Okay, whatever I intend to share. Just actually two more slides. First is that the magic formula, right? Joel Greenblatt did one. Okay. Asked that is you're supposed to just buy off the entire screen results, right? So if there are 30 stocks, just buy the top 30 stocks. Okay. Don't even nitpick like what I just did, right, is actually what he discourages, okay, because he realized that when people start to nitpick, right, you introduce a lot of your own biases. You realize that I also tend to pick stocks that I'm more familiar with, and I'll avoid stocks that I'm not familiar with. So there is this tendency, right? But that said, I think it's very difficult for most people to follow a strategy quantitatively. That means you just buy whatever comes out from the screen, right? Because what I understand over the years is that investing also requires a lot of conviction, because the stock market will go up and down, right? A lot of people say, oh, you should invest in long term, long term, long term. But when the market tanks very terribly, right, it makes people scared. And it's very easy to do the thing, right, which is to sell at a very low price, right? It's very easy to do that. And in order for you to really hold through these kind of tough periods, you do need a lot of conviction in the stocks that you pick. So I tend to think that yes, obviously, if you can just follow the magic formula quantitatively 100%, you should do it. But on a more practical basis, I think most people cannot do it. Okay, most people require the conviction, and then the conviction would require you to know the stocks that you have bought, and then you must have confidence in them, right? So naturally, I think nitpicking from the list of screen result is no choice. Okay, and also that you must understand quantitative screen tends to be weak on the qualitative analysis, because algorithms cannot tell you things like the quality of the business, who are the competitors, does it have competitive advantage, or how good the management is, etc. So if you nitpick, right, you're going to spend more time, right? So the qualitative analysis can come from your side, right? Which screen results like magic formula would never be able to do so. Okay, so I think nitpicking is not wrong, right? Granted, maybe there is a chance of underperformance compared to if you just buy quantitatively the 30 stocks that is suggested by the magic formula. I think that conviction, the qualitative analysis are still important aspect to investing. Okay. Travis asks, applicable for tech stocks. All right. We're gonna add in the US stock market soon in a few weeks' time, so you can also play around with it. Right. I don't know whether any tech stock will spill out of it. All right. Even if it is, right, they will tend to be the bigger tech stocks rather than the newer stocks that have not made money yet. Okay, because remember there is one screen result which is earnings yield, right? So if they don't make even operating profits, right, then they will be ranked very low on that screen. Okay, but their ROC should be very high, right? Their ROC should be, because they are asset light, right? So their capital should be low. Okay, so possible, right? Possible. Or you can alternatively use it to screen for stocks in Shenzhen. Right, we have the data already. You should be able to find some tech exposure over there. Okay. Uh, Kang Hao asks, the measure format is based on the US stock exchange. Any evidence that it worked in other regions, even for US, has actually been backtested in recent years? Persistent, blah blah blah. Recent years, no. The book was last published just after the last financial crisis. Okay, so as I said just now, the results are not updated. Okay, and whether it's outside value works or not, this has been researched quite extensively. All right, um, I will still park magic formula as a value factor. Okay, actually it's a mix lah. It's half quality, half value factor. All right, so and these factors have been known to be very consistent throughout the throughout the whole world. Right, so I do think that whether is it US, whether is it Singapore, it will work. Okay, no empirical evidence, right? But there are empirical evidence for other kind of value metrics and quality metrics. Okay, but based on that similarities, that's why I say that by mathematical induction, okay, magic formula will work as well, right, in foreign countries. Stonehaven asks, ST Engineering, any idea why not in the list? I don't know, right? Because it just didn't rank high enough. Okay, because this is a very fair system, right? It's really just based on ranking. Okay? It's not based on your preference, right? So that is another downside of algorithmic kind of screening tools, right? So sometimes your favorite stock may not appear, and then it's natural. Okay, you just have to accept it, right? But that doesn't mean you cannot buy your favorite stock, right? You still can do so. Okay, you just need to use other investment methods, okay. Gary asks, limited resources, almost hard to buy all this. Is the screen up? Yeah, correct. Okay, so that's also another dilemma, right? So when Greenblatt say, oh, buy 30 stocks, right? So you also assume that someone has sizable capital, right, to diversify into so many, because you also need to meet the minimum investment into each stock. So it's not so beginner friendly, right, or for small capital. So that's why nitpicking again makes sense for most people. All right. Kevin asks, how does Magic Formula compare to CNEF? CNEF is purely value, all right? Magic Formula, as I say, is half value, half quality. Okay, so there will be differences. The stocks that get thrown out will be different. Okay, there may be a few overlaps, right? If let's say a Magic Formula stock that rank high on the earnings yield will tend to also pass the CNEF. Okay, so for those who don't know what CNEF is, it's a strategy that I devised, right? So those who have been through the class would know what it is. Okay. Sparklebuck asks, what is the magic formula you are talking about? Okay, so maybe you need to, if you haven't joined us or you just joined us, you probably need to start from the front, and then you will know. I explain what this strategy is all about, how it came about, who came up with this, and how do you screen for it. Okay, so I've explained it in the past 1 hour, and I apologize because I can't show the slide now. My screen is frozen, and you can only see my talking head. Okay, I don't even know whether I can off the broadcast or you just continue indefinitely. All right. Okay, so just play around with the app. Remember, when you use the app to screen and you watch this then, right, please go and create an account so that you can save it, right? And you can actually create an app in your desktop. Even though this app is not listed on App Store or Google Play Store, right? You can use it like an app. We have the instructions in the FAQ, right? You guys just go to the profile. There's FAQ. We show you how to add it to your app itself, right? So you can just see it on your phone easily. Okay. All right. Let me see. A few more questions before we end off. Okay. Klama asks, can't see the full page. Okay, I don't know what you're referring to. All right. You said can't see next to price earning, right? Maybe if you have any issues with the app, just screenshot and email to us. We see, because it's very hard to know what the problem is, right? Eddie asks, Dr. Wealth new business, launch an ETF on this magic formula. Okay, the best person to launch it is not me. The best person to launch it should be Joel Greenblatt, because they came out with this magic formula, right? Not me. Okay. right? So no, we have no intention to start an ETF on Magic Formula. But come to think of it, there isn't one, right, in the first place. Maybe there isn't one in the first place. All right. Kang Hao asks an idea for Dr. Wealth to explore a modified magic formula with a CNF value ranks, GPAT quality rank, convert them to Z scores. Okay, because you attended Chris' class as well, right? This one I must explore with him, okay, and see whether it makes sense. All right, okay, but good. Okay, thank you for your suggestion. Right. Okay. So I guess nothing beats playing around with it. Any problem, just let us know. All right. I hope this session has been useful. Apologize again for the screen not able to share my slides at this point in time. And just play around. Just go to app.drwell.com using your browser. All right. And you can go to the discover screen and you can just screen for Magic Formula for all the Asian markets at this point in time. We're going to add the US market in due time. All right. Enjoy the screen and hope to see you again. Okay, goodbye.